Okay, hello everybody. Welcome to another edition of the AlgoDynamix Podcast Series, where we invite the best of the best and ask them probing questions, see if they can give us some insights. So that's the format. So just a little summary. So we'll have a Q&A, quite a good extensive discussions with Rebecca of the first half, and the second half is your show. So you can type your questions. You can come on stage, so you can raise your hand if you want to speak, and then it will be a additional opportunity to find out more, actually, because I think Rebecca is extremely knowledgeable. We've just had a pre-call, and she's been sharing some of her research. So first things first, a quick audio check. Tarun, first things first, since you're a bit further away, can you hear me? Is this working?
Yes, I can, Jeremy.
Brilliant. Okay, and then Rebecca, is that are you still there? All good?
Yes, I'm here. All perfect.
Good, Ashley. Okay, so Rebecca, thank you again. Floor is yours. I think just, incredible insights you've just shared. So just take it a step back and summarize. So you spent at least 6 months, was it 3 months, 6 months, researching the crypto space as part of your EMBA. Yes, go ahead.
Yeah, it was a 6 month, I think over 6 month research I did for my executive MBA, mostly based on the impact of cryptocurrencies in the economy, the European economy. In order to do that, I obviously had to expand a little bit my research into other markets, like the American market, Africans. I had to look at it all, but mostly focus on the European markets, and for understanding the impact of cryptos in the economy, I had to. So I keep saying we because I had a supervisor who kept walking me through the entire process. So I had to draw certain parameters that will be taken into account. So for people to understand, those who are not finance or economics in background, in order to quantify anything, we need to set out these parameters. And obviously, in a research, you cannot cover all the parameters. You have to focus on those who are more important for the purpose of research. If we are saying the impact of anything, not just crypto, but anything in the economy, we could base that research in a lot of ways. Like in the case of crypto, we could say the number of users, we could say the volume, which means the amount of trading or sell and buy that we get in the market. We could also say, for example, the capitalization of the market, which is the amount of cryptos out there in the world multiplied by the price of those cryptos. So there are many, many parameters. We could also measure, for example, the amount of daily life operations that happen with crypto. Let's say in that sense, it will be salaries of people, or are people just regular retailers buying houses, buying cars using cryptos, getting their salaries in crypto, buying in the supermarket with crypto. So there are many parameters that we could have chosen. I could have chosen. But in that path, I decided that, first of all, cryptocurrencies are not just an asset, but it's mostly a financial asset. So it's used mostly in the financial markets. Therefore, I decided to focus more on the financial markets, not abandoning the rest of the parameters, but proving those who were not really important. In that sense, my research started with on-chain data. For those who don't know, on-chain data means the data analytics that we get from platforms like Chainalysis, which are very good in tracking information about the use of cryptos and the amount of users based on their demographics, the amount of volume, the trading volume that we get, like all the information crypto related. So first of all, I took a lot of data from them, and I started to analyze how much of that was actually impactful to the economy. Secondly, I went and I interviewed experts on the crypto space. I also interviewed experts from the regulators, the European Central Bank, which are the most important regulator we have in Europe. I also interviewed experts on traditional markets. Now, when I say traditional, I mean stocks markets, not crypto related, just regular stocks, commodities, derivatives, all of that. Not crypto derivatives, just traditional derivatives. So I interviewed both sides. Why? Because in order to understand the impact of crypto in the economy, we need to understand the economy itself. There's no way to separate crypto from the economy if we don't know what it is, if we don't know how well the economy is going, or what are really the parameters for the financial markets itself. Okay, so those were the three, the two most important, let's say, bases of the research. And then obviously the third one was literature. So there was a ton of literature reviewed in order to accomplish these results. So the most important headlines that I got from the entire research were obviously the use of cryptos have been increasing since we first got in the market in 2008, mostly from 2020 in advance, because, COVID hit. And then we made the news, the entire crypto market went super public in the sense of marketing, people buying, people actually hearing about crypto for the first time, because before that, those who are the podcast and are financial experts or have been in the crypto market, that before that, only a handful of us knew what cryptos were. So there's no need to talk more about that. Obviously, we have increased. Now, the important things that I found were the crypto market in January this year was over $3.5 trillion, the entire spot crypto market. Now, for those who don't know, when I say spot, what I mean is buying, selling, or buying, holding the crypto and then selling in advance, but not using any of the fun stuff that we do, let's say more experienced people.
I'm gonna probably interject. You can probably sort of guess the question, Rebecca. So spot market is the cash market. Any sense of the derivatives market? So just a bit of context. It's related instruments that are not directly crypto physical, because that's probably substantially bigger than the spot market, right, Rebecca? I don't know if you get a sense of what those numbers look like.
It is. That's the next number, the derivatives market. Yeah, but in here, for this first data, let's just say spot. So no derivatives, just spot market. So in the spot market, what I found was in that time when we were $3.5 trillion, the traditional market was trading over $700 trillion.
Wow. Okay.
So the European market itself is actually 28 trillion euros, but trillion for us is not the same as $4. Either way, just compared to the European market, we were 1% of the entire market. If we add in the American market, which is far bigger, there's actually no impact in the capitalization or the volume of trading for crypto is completely zero for us. However, one important thing to understand here is, and I was very keen into finding this out, there is a lot of bad marketing for us out there saying that cryptos are used for laundering money, which is not entirely a lie, but it's also not entirely true. So 5% of the entire GDP, the global GDP, is actually laundered money. 5%.
Okay, wow, shocking. Okay.
And this is actually, you can find this online. The Interpol is actually releasing these statistics. So out of that 5%, not even 1% is laundered through crypto. Yeah. So for those who say that crypto are actually, used for this bad means or whatever you want to call it, is actually not true. So even in that sense, when we compare it to money laundering, is also not impactful. But what I did find that was quite interesting was the European market represented 21.7% of all global transactions for crypto. So we are not the main market for the cryptocurrencies, but we are quite big, including European, Central, Northern, and Southern areas. So we are not including Eastern European in here, which, as everybody knows, are quite big. The other important thing that I have found was that high-income countries, which is pretty much the US and these European, Central, Northern, and Southern countries, only come into the market when we hit all-time high prices.
Interesting, yeah, okay. Is that news? Did you try and sort of extrapolate that because it's in the news, retail get excited and they start buying? Is that a simplistic conclusion, Rebecca, or why do you think that is?
Well, Jeremy, holding a PhD yourself and being an academic, I cannot make that statement. Okay. But if I had to guess and be a bad academic, I would say could be. It's more about. So one thing that I could try to take out of the entire research is countries react to crypto depending on their needs. So if we are trying to take this data and take it down to simple words, we could say this. Why? Because one thing I found is when we are over 75% drop in price, which means a crypto winter, in every crypto winter, the countries that start buying mostly are low or middle income countries. So we are talking about sub-Saharan countries, Latin America, and let's say Nigeria, India, these kind of countries. They're more interested when the prices are low. Why? Because they want to make reserves. Also, I found during the data, one thing that has been on the news previously, honestly, is that this one is my finding, but everybody knows that European immigrants to Europe, usually they send money back to their families. Therefore, crypto are very good for these purposes. They usually do this even more, like they buy and restock their wallets of crypto when the prices are low. So what I could see on data was it's easier for these countries to jump in and try to make wealth out of cryptos when cryptos are low. However, healthy in terms of economy countries, let's say high income countries like Northern Europeans, are more keen when they see that it's actually going up. Now, whatever you want to make out of that, let's say who is better at trading or not, that's
different use cases. I mean, once again, be careful with extrapolating, but it sounds like there's different use cases. Maybe that's why a different pattern too, actually. I don't know, once again.
Exactly. Yeah. For example, I did, everybody knew this, but in terms of the research, I had to make this very clear. Eastern European countries like Russia and Ukraine, actually, they were very important in the crypto space before the war, but when the war hit, they went massive. So it depends on the needs of each.
It is needs-based. Right? Interesting. Very interesting.
Exactly. Wow. Okay. Completely. Yeah. So in terms of derivative, you were asking earlier, Jeremy.
Rough sense of the ratio of cash, physical to derivatives, crypto. If you got a vague idea, Rebecca.
I actually I have some data on that. So the thing is, when it comes to European derivatives, we were trading 3 times the spot volumes.
Okay.
Let's say March 2024, the capitalization of the crypto space was a little bit over $2 trillion. The derivatives volume in that exact time was actually 3 times. So there were small buy and sell on the derivatives market and on the spot market. We were still not comparable to the traditional one. So obviously it was far less than 1%. It was actually far less than 0.01% of the traditional derivatives. So it's not really important compared to the derivatives in the financial market. But it's quite big for the crypto space. And right now it stays as the highest trader product in the crypto space. So we use more derivatives than anything else in the crypto space.
Interesting, actually, because I think from the traditional markets, actually, from commodities, actually, I think it's like commodities is exception, maybe, oil, whatever, gold. I think it's 1 to 100, whereas in crypto it is that sort of 1 to 3 ratio, one physical and 3 derivatives in crypto, which is low. I think it's low in the grand scheme of things. I know. Do you agree with that one, Rebecca, or was it just no opinion?
It's actually not really comparable. So we're talking about the relationship between commodities and derivatives in crypto. What I'm talking here is the entire crypto derivatives market compared to the entire derivatives in the traditional market.
Okay.
Not comparable whatsoever. However, if we say the derivatives in crypto compared to the spot trading in crypto, derivative wins. That's the end game. So derivatives right now are the biggest product in crypto. So if we're comparing, let's say, lending, spot trading, we are comparing derivatives in its, all that includes futures, options, all that. When we compare the entire products, derivatives is the top gun here, and it has been growing a lot in the past 3 years. The thing is, we are, as you have seen, probably many of you have seen, in the platforms, we are offering more and more options, more and more futures. So the more options we have for clients to buy, the more futures we have for clients, the more we're getting trading on this.
Maturing nicely, that market, actually. It's getting sophistication and regulation and derivatives and all these options. So it's very, Good development, actually. Very, very glad to see that. So good. No, fascinating, actually. And then I don't know if it's public yet, but I think the research will be shared at some point. I think Harvard's going to republish. Then is that correct, Rebecca? I don't know what the plans are, actually, because it sounds.
We are. Yeah. So the plan.
Did I say this already? Well, it's too late now. Sorry.
So the plan is for them to publish it. So we're already negotiating with them because you have to send in the research, they edit it. And they will decide. It doesn't happen overnight. It doesn't happen that fast. They have to analyze bits of it. Then they only publish let's say in magazines and stuff. If you have 100 pages or 200 pages research, they have to take it down to put it in the magazine. So it takes forever. But yes, the plan, it will be published, and we are already pushing for Harvard to be the one who publishes it.
Nice. Congratulations. There we go. Good, nice, proper research from Cambridge, making a global impact. So congratulations, Rebecca. And I think on that note too, and it's a slight segue, you've got the book. I think the book's been a while already, actually. You published the 2 years ago. You had your book that came out. Which was it 2 years, 3 years? Well, how old is your book come out?
2 years ago. It's currently used as the manual for, let's say, the textbook for one of the biggest financial institutions in Europe, IB.
Congratulations.
So, well, is it? But it's in Spanish, though. It's in Spanish right now.
Okay.
So it will be translated into English, but that also takes time for editing. And while I was doing research, I couldn't, manage all of that at the time. And now I have another important project coming out. So I haven't had the time to oversee the translation of the book, but it will be, and you can find it on my LinkedIn. It's published there, the name of the book and everything. And for those who speak Spanish and want to buy it, you have the link in there.
No, congratulations, actually. I mean, even I think so. Spanish language, Latin American market. I think you're probably okay for now, Rebecca, right? I think looking at the numbers and the penetration there.
It is. It's actually quite a big market, very interested in cryptocurrencies, and also very, very eager to learn. So it has been a good publish, let's say, so far. Yeah.
Well done. Congratulations. Good. There we go. That's why I like these guest speakers, actually, because they sort of they set quite a high bar. So I think it's just put in context. Thank you for that, Rebecca. So I mean, just you've got multiple hats on. Obviously, you've got the academic hat, the research, the publisher of the books. I don't know how much you can say that there's going to be some compliance limitations, but your hedge fund is in progress. Is that a correct statement, Rebecca? Can I sort of say as far as that? It's still pending regulatory approval? Is that a good summary of where you are with your crypto hedge fund? Yes.
Exactly, Jeremy. Okay. So I have a family office that has been running for a little bit over 2 years, and we already presented all of our paperwork to become a hedge fund. Everything else is ready. We are waiting the license. We are already at the end of the entire process. So I hope that in the next month, or maybe the current one, we will get it. So it will be a crypto derivatives mix because it's going to have a traditional part to it, hedge fund based on the same team, the same strategy that we had at the family office, which has been very good so far. And we can say that we have accomplished over 1,200 return last year, and if we go, it's very good.
Madness, absolute madness. Congratulations, by the way, astonishing return. Which is, I mean, it's a crypto thing. People seem to forget about that. Yes, it's risky, it's moving, but in terms of making money, I think it's opportunity, obviously, isn't it? Really, so congratulations on that. So
there is a lot of opportunity. That's why the derivative market keeps growing so fast.
It's new, isn't it, with your fund? I think you're taking all the volume, aren't you, Rebecca? I think that's what's happening.
It could be. All the volume is ours.
Yeah. Okay. Well, I might be a sort of significant player, actually. Good to hear that. Actually, congratulations. So we'll keep a track on that one. So I think so. We covered that. The research. I think you already did. And it probably came out of your research and your own views. I mean, the world's a very dynamic place. I'll be neutral here. And any thoughts about what things could look like? A macro global crypto. I think it's an open question, Rebecca. How you see things panning out in the next sort of short, medium, long term across the sectors? Yes.
So currently, when I was studying all the crypto crypto winters or the big waves that we have in the market during the research. And as a trader myself, I usually do that. But it's a different thing when you actually started. You take a look back and you start looking at graphs from 2019 to now, and you realize that there are trends. Obviously, there are trends. So right now is the summertime. Usually in the summertime, even though institutionals are big now in the market, we still have a big percentage of retailers. So one thing that we usually see in August is prices drop. Yeah. Right now, we are encountering a big resistance that we have in the market. If we do not break the resistance anytime soon, we should encounter a correction. That's what I'm expecting in the market. And when, having a family office, our own money is on the company. So we do this very aware, not only that the hedge fund has a third party involvement, but it also has our own investment. So we are on top of the market the entire time. So in the, let's say, medium term, next 3 months, that's our guess. August is always a drop down. Then it starts moving up in September. Facing December, we are long. I think it should go back up and finally break the resistance if we don't manage to do it now. So also, there's one important thing that we keep reminding ourselves, and that is if prices keep moving forward, keep going up, we cannot go and collect more retailers. There's no way for people to go back into the market, buy those who are selling to reinvest, and they're going to make less. So either now or later on, prices will also go back into a crypto winter, maybe the next 2 years. But we need crypto winter. So the reason why we have that is like we are cyclic as the economy. Every market is cyclic. Yeah. And we need winters to go and pick up new investors and for us to restock our wallets. You keep doing the same operations once and over and over and over. Once you go liquid and you're cashed, then you can go and buy cryptos if the prices are interesting. If we keep driving prices up, at one point it's not going to be interesting for anybody. There's no way to maintain. It cannot be organic. So I would say for the next 3 to 6 months, immediately now, I think it's in summertime, like I said, it's going to go down. But from September on, it should go back up. And then in 2 years, so maybe a little bit more, we need a crypto winter. And I hope we can actually try and do that, though, as everybody going short.
It's interesting, actually. It's cycles. I guess it's cycles until the cycles are not there, right? I think it's all, yeah.
But when the cycles are not there, that's not actually good, Jeremy. Like we need cycles to grow. We need the growth to be organic. So one thing that is not good for any, if you look at graphs and you look at tokens that usually go 1,000% up overnight, and then usually what follows, it's just going broke. Most of the projects, those who make it, but most of the projects actually don't ever make it anywhere. But those who work, many of them work 1,000% up, then back to zero. So there's no way to keep maintaining anything if you don't have a cycle. For the growth to be organic, to be maintainable over time, and for people to trust this, because we are getting more investors, because we're getting more users, because people like crypto. Crypto is a way of creating wealth. If you cannot create wealth, why would you buy it? Then you would go to another, let's say, more stable asset like a stock with less volatility, where you can get a 2-3% every year. If we keep going this rate, it's not going to be the best option for the market. What can you do 1,000% from now? How can you get 1,000% from now when we are 107,000? It makes no sense. So my guess would be, if I were the person driving the market, which obviously I'm not, but if I were, I would push for a crypto winter in about 2 years, because it's the only way for us to grow organically.
Interesting, actually. Yeah. Okay. That's something to be said about that. But depending again, I guess depending if you're stocking up or depending on your use case. But that's interesting. I think we're probably not going to talk about the smaller projects. So just to be clear, now we're covering the big crypto coins, cryptocurrencies here, right? I think the meme stuff is maybe not. Maybe a separate discussion, but I think it's maybe. I don't know. Do you want to comment 2 seconds on that one, Rebecca, or no comments about these thousands of new coins coming up every day? Is there any thoughts on that one? Or
Honestly, I wouldn't comment on that. I'm not a big fan. So, like I said, what we use mostly derivatives, and we don't have the derivatives for every other crypto token, that comes out. So we usually do derivatives on the major cryptos because those are the ones we are allowed to do. There's no futures or no options for, I don't know, whatever weird token came out yesterday. So
who knows what came out yesterday?
Who knows what came out yesterday? Probably 1,000 of them. But either way, no, I think, Jeremy, I'm not a big fan of meme coins.
Same here.
Yeah, I'm more of a value investor when it comes to buying new tokens. It has to add something to the market. But I do understand why people are speculating on new tokens. But, I don't think
speculative, actually. Yeah. So, bit of context for our sort of traditional finance people on the call, actually. So I guess you can, if I can call them blue chips, the big ones, the Ethereums, the XRPs, and the Bitcoins, and then there's a mid-range. I don't know if you want to put Solana, and then there's lots of new ones, which is probably the pink sheets, actually. So there are different risk categories and return categories for the crypto space. I think that's just an overview. I think stable coins, let's not go that way, but there's many other forms out there, but we're just talking about I think it's something else you cover. So we're generally about halfway through. I think there's already questions coming through, but Rebecca, anything else you want to add? I think there's some more questions coming through, but any other? So we've covered the impact, did a dive on your research, your views on what it might look like. I think your views on the altcoins, I think we've covered that. Regulation 2. Comment. I guess it was mostly European focused, right? You're EU focused, so that was the bulk of your research.
Yeah, it was mostly European focused, but there are two things that I would like to point out before we start with the Q&A. First of all, yes, we do talk a lot about markets. And by the way, in the European market, I did find that Estonia is actually the leader for crypto platforms.
Interesting.
I leave it there for everybody to go and find out why. There is a reason behind that. But yeah, one thing that I was asking, being a portfolio manager myself, was have cryptos, let's say, impacted the way that managers, even traditional managers, are doing their own portfolios? Like, is it affecting the way they see risk or the way they're hedging? And there is a ton of literature. Well, when I say ton, regarding to crypto, might be like maybe 10 papers. Just remember that there's not a lot of papers on crypto. So ton for us, like 10. But I did encounter some papers about that, like talking about the risk of using cryptos for hedging a portfolio because, the volatility and all of that. Yeah. And one thing that I kept on asking in my interviews was, has it affected the way that portfolio managers are seeing risk? Has it changed the way that they are creating their strategies? The answer was no. And then I started analyzing changes in strategies. I started looking at portfolios from JP Morgan Stanley, all the big ones, and seeing if there were major changes throughout the past 5 years compared to the use of cryptos. And I can say in the sample that I used, there were none. So this
is big traditional fund managers. Is that a good summary? Yeah. Okay. A big traditional ones.
Exactly. Okay. For big traditional, those who are not using crypto, important parentheses, those portfolio managers who are not. Yeah. What I mean by not using crypto is who didn't use crypto before 2020. Okay. So if they didn't use crypto, I started analyzing what they do today, and most of them are actually not using crypto yet. And then the really big ones, obviously, if you're using if you're a fixed income portfolio manager and 100% of your portfolio is fixed income, obviously you're not going to switch into crypto. So I was looking mostly at stocks. Portfolio managers focus on the stocks market. They are not using crypto. They have not changed their strategies in a radical way, actually related in any way to cryptocurrency. It was mostly related to macroeconomic changes. Like they were more related to other stuff. So that was actually very important for me at the time, because I was completely convinced that it did change anything at all. And the answer was definitely not.
It's quite binary, because I mean, we speak to both of them. We all speak to both of them, the traditional ones and the new ones, actually. But it still causes a lot of friction, actually. So some people still seem to be allergic to crypto, which is disappointing. But I mean, we're not here to necessarily convert them.
It does. However, when I was doing my interviews, one funny thing that I saw that wasn't actually very important for the research. It was more of a social outcome. Actually, traditional portfolio managers were more pro crypto than crypto ones. So they saw the future. It was amazing. So when I asked, what do you think the future will look like? They all went, it was a more elaborated question with more stuff, but pretty much that was the outcome. And they were saying, oh, traditional ones. They were saying, no, full on crypto, 100% crypto, no stable coins, no nothing, just cryptos. And I said, that's actually not doable, but okay. However, the crypto experts, they were more conservative, saying, well, we're going to have stable coins, we're going to have cryptos, we're also going to have any form of traditional currencies, like maybe not fiat currencies itself, but maybe a CBDC, because we have to link cryptos, we have to link stable coins to something, and it cannot be something as volatile as Bitcoin itself. That's right. And it made total sense. So that was a social, let's say, answer, because it was in no way really relevant, to my research, but it was quite interesting. But the second thing that I wanted to say, Jeremy, that I found was there is a lot of talk about the CBDC, and that is a whole new subject for another hour.
Let's skip that one for that. That's probably more. I mean, arguably, in a summary, I'm not even sure we could call it a crypto, but as you said, Rebeca, maybe we'll sort of leave that for a future session.
It's not a crypto itself, but I didn't count. But I had to touch it because I was doing the research, and it was a big subject in the space. But I didn't count one paper from my Italian professor, from my Italian university. I don't remember his name, but he was comparing. I can look it up if you want to. But he was an economist, and he was using finances to prove what a future using full-on crypto will look like if fiat evolved into CBDC only. And the result was actually disastrous. It would mean the end of the banks as we know them, because if you have CBDCs, obviously the European Central Bank will have the entire power. And then if you can hold your cryptos at your home in your cold wallet, what do you need a bank for? It was a very interesting paper, so I encourage all viewers to
maybe it's worth putting on your LinkedIn at some point, actually. Okay, so what the banks are hoping for might actually be detrimental for the banks. Okay, interesting. So, well, some banks actually. So, okay. Wow. Okay. Right. Everyone, I feel like we can sort of go on for multiple hours, so this is probably a good time to take a quick short break, and the questions are coming in. So, Tarun, take it away. Give us an update from AlgoDynamix, actually, because we're also seeing a lot of different crypto adoption, different crypto use cases. I think, given the perspective. So, Tarun, go ahead. Go, guys.
Definitely. Hi, everyone. I'm Tarun. I'm the president of AlgoDynamix North America. For those of you who are tuning in for the first time, we're a data analytics firm. We specialize in price forecasting for the financial markets. We cover most of the major asset classes, crypto, commodities, and equities. As Jeremy mentioned, a lot happening on our side since our last podcast. We just signed up another client, a new client in the UK, a young tech entrepreneur. He'll be starting a number of funds with us, a crypto fund, an equities fund, and a commodities fund. In Hong Kong, we still have our partnership with Jacobian Capital, a startup quantitative trading firm. They're running a long-short crypto strategy using our analytics. And Jacobian will be open to new investors in the coming months, so we'll keep you updated. Then in Texas, we'll be launching another crypto fund, long-short crypto fund with Gorum AI, a startup AI company. And Gorum will be launching probably in Q3 or Q4 this year. Then in California, in Silicon Valley, we have our partnership with R42. They're running an AI equities fund that uses our analytics to outperform the S&P 500. That fund is open to new investors as well. And then back in the UK, we have our long-standing partnership with Solidai, a UK crypto exchange. They are running our crypto basket, which we built for them, which we constructed for them a couple of years ago. And that's performing quite well. So for those of you who are interested in starting a hedge fund, you can definitely reach out to us. We have a fund partnership business where we build ready-made investment portfolios for our clients. They take those portfolios and they market them to potential investors. We can build you a crypto portfolio, an equities portfolio, commodities portfolio, or a hybrid portfolio. And if you wanted to try out our software, we do have our 3-month trial package. The total cost is $3,500 US. And we provide you analytics for cryptocurrencies or equities if you're trading stocks. And we also provide some additional services in that package as well: support, back testing, sample portfolio construction, historical data. So if you want some more information about our software, fund partnerships, maybe our technology, or just find out a little bit more about the company, you can reach Jeremy at AlgoDynamix.com, or you can reach me at Tarun@AlgoDynamix.com. Thank you.
Yeah, thank you, Tarun, because you've got the global ownership, the global views of what's happening actually. Yeah. So we are seeing that sort of mixture on that one. So briefly on that one, there's another one in Hong Kong actually. We may or may not announce that one, but same by the way, it's crypto and multi-asset. So equities, including things like uranium funds, actually. So real strange things, actually. It's like, okay, fine, okay, we're agnostic, right? We're in the data analytics space, so we don't really matter what the underlying is, as long as we can price forecast it. But we are seeing a lot of fascinating developments, actually. So interesting times. So okay, right, Rebecca, questions are coming in. So a bit like a quick question round. So I hope you're ready for this. So let me fire off the first one. So from Linda, always good seeing you. It's challenging to learn the ins and outs about crypto without strong proper education. Is that so? I don't know if it's a question or a statement, actually. Rebecca, maybe take it as a question. So it's challenging the ins and outs. Do you think that's why people are hesitant to adopt crypto, because it can seem a bit like challenging, and there is a perception of scams going out there? Rebecca, do you want to comment either way on that one, or?
So I would say, as an academic, I shouldn't say anything. Wow. Actually, I will answer in my personal opinion, not the academic one. Yeah. But I did encounter a lot of information about the bad marketing that we have in the crypto space. It is, and I have people every day reaching out to me, friends who had friends being scammed, people who reach out to anyone in the team saying like, this happened to me, what can I do? There is a lot of scams. However, be aware there is always sign that it is a scam. And it is true that people are afraid, because it's not just the person who gets scammed, it's their entire network. Because then that message that they got out is, well, I actually tried cryptos and I got scammed. Recently, I encountered information about an academy that was created by hackers who replicated an academy. They set up a supposed master's degree in crypto. They then posted as students themselves to take money out of their colleagues, and it worked. And they're working throughout Europe, mostly UK and Northern European countries. The police is aware and already chasing them down. But the thing is, there is a lot of scamming. Yes, Linda, and we are aware of that. I would say, first of all, if you want to learn, usually what we do is go straight to the analytics. Glassnode, Chain Analysis, they have their own information, and it's not that hard to learn, to read about it. Like, you don't need the entire database that they have. You just need to look at the graphs. Now, 5 years ago, their graph didn't have any information in terms of explaining what it did, but it was showing you. Now they have updated it, and you can actually read about the graph, and you can understand what you're looking at. After a while, that would turn into a natural way for you. And you don't need you don't need to be a mathematician. You don't need to be an economist, to read this. You can just go in and start looking at it every day. Obviously, you have to pay a subscription for any of these platforms. By the way, I don't have any deal with them. I'm just a big fan of their information. But that's if in terms of learning and knowing that you're not learning from a bad source. But always check out the link that you're touching, because actually, the hackers usually they copy websites and they post it as the original website. So if you go in and it says glassnode.mx, that's not real. So usually they go
quite far, actually. There's one, I'm just going through my own network, actually. Only one case. I don't know if I'm not hanging around the right people. She unfortunately, that was a direct wallet hack. And here's a conundrum actually, Rebecca, because allegedly it's decentralized. You can have your own wallets. My this is anecdotal again. My anecdotal data points suggest that actually the wallets are more vulnerable than actually using a broker. Any comments on that? Once again, this is anecdotal. This is not sort of backed by
it depends. Yeah. It depends on the person. Obviously, if you have your wallet and then you go in and the same device that you're connecting your wallet to, you put it on any public Wi-Fi. Yeah. Obviously, it's more open for hackers. But I have encountered many more cases of people going into platforms that actually don't exist than anything else.
Interesting. So fake brokers, fake platforms. Interesting.
Exactly. Fake platforms. So people who thought it was Binance. For example, I had a case last year who it was a friend of a friend and reached out to us because he connected to a supposedly Binance wallet. And it wasn't Binance. It was just hackers copying the Binance platform. Yeah. But if you look at the link, you could see it.
That's just, I mean, that's not necessarily crypto related, I guess. It's any website can be sort of spoofed and hacked, right? So that's an unfortunate situation. Okay. No, thanks for that. Yeah. Obviously, Binance is probably number one in terms of global volume, right? So that's a dangerous one, right? Yeah. Okay.
It's very dangerous. But yeah, people investing in projects that don't exist, that's also very huge.
Well, that's why we hopefully we had a little message here about there's the blue chips, there's the mediums, and there's the complete sort of pink whatever you want to call them, pink sheets actually in terms of risk profile, return profile. So good actually. Right, question from Stuart. Okay, Stuart, always good seeing you actually. Stuart, related to your part one, Rebecca, crypto is used for a remittance. Absolutely. Yeah. Any numbers about which countries are the most recipients, which countries are the most sending? What's your data? Yeah.
Yes, there is actually studies on this. If I remember correctly, I cannot tell you the exact numbers because I don't have it printed in my head. But there are studies about this, Stuart, and if I remember correctly, it was Latin America and Asia, but not China. So when I say Asia, we're taking China out because China in 2021, since they banned crypto, the use of cryptos in the country dropped. Then they allowed it back in, or Hong Kong did. They allowed cryptos again, but either way, it hasn't picked yet to impact the entire crypto market as it used to be before 2021. But I did read a lot of information about Latin America, mostly Ecuador, if I remember correctly, it was Peru, Ecuador, and El Salvador, I think. Well, the three of them.
Receiving remittance, basically, that's what you're saying, yeah?
Exactly. Remittances mostly from the US and Mediterranean countries in Europe. So it was mostly from US, Spain, Portugal, and Italy, something like that, if I remember correctly. But if you want to read about it on ResearchGate, you just have to put in the magic words, crypto remittances, something similar, and it will pop out.
No, it's big actually. And then fair point, Stuart. I think being specific. So is this the cryptos, Rebecca, or the stable coins, or because the details matter, I guess. What is remittance?
No, they usually they send out stable coins.
Stable coins, that's right.
Yeah, it was USDT and USDC mostly. So the thing is, they're trying to send stable coins because they want the family members to receive the money at the value that they send it and be able to sell those stable coins for fiat currency and then live out of that money. So if you send, let's say, 150 euros to, I don't know, Ecuador, it's not the same value. 150 euros in Europe, you don't do much, but in Ecuador, it might be life-changing. So the idea is to send out stable coins and they sell those stable coins for fiat money to be able to live. And it happens the same in parts of Africa, like Nigeria, when they're actually going into the market and buying with a stable coin. So they're not even changing it back to fiat money. They're just keeping the stable coins right now.
Which is a complete parallel finance system there, isn't it? So that's just,
it's a huge stroke of the traditional financial system. But the thing is, Jeremy, they're trying to avoid. So the amount of fees that we pay, maybe it's okay for us, but it's not okay if you're sending money to a family. Imagine if you're sending 150 euros and you have to pay 32 euros in a transfer fee.
Is that traditional fees for the fiat transfers? Yeah.
Exactly. So, for example, from Spain, if I try to send into a Latin American bank account, I usually pay 32 euros. I know this because when I was doing the research, I was looking at, okay, how much is it? And I started trying to do it myself. I got friends who have bank accounts, Latin American banks, and I tried to do it. If, for example, Mexico uses BBVA, which is a Spanish bank, so transfer from Europe that over to Mexico are not as expensive, and usually it's zero transfer, zero fee, because you are inside the same bank. If you are inside the same bank, if you have to transfer out to another bank, then it's usually 32 euros, which is a big percentage compared to 150, which is the average remittance sent.
Average remittance is 150, and then if you have to pay 32,
a month, well, not a month, sorry, per person. It depends if it could be weekly. Also, they calculate the amount of money going out from every account with a Latin American origin destination. So the average is 150.
Wow. Okay. Good to know these numbers, actually. So, okay. No, I had separate discussions actually with sort of, what's the use case? What's the use case? I mean, I think remittance is about as clear, well-defined use case as you can get, right? In terms of what is it used for? I think there's still some discussions about that, and there's people complaining, speculations. Like, yes, but okay, thank you very much. We're crypto biased, aren't we, Rebecca? We're on a crypto podcast, right? So I think we need to be try and stay a bit sort of, I'm not saying neutral, but objective as to why people might sort of, object to it. So, and then, I fully agree, by the way, the chain analysis, actual money laundering is minuscule, right? And then you mentioned that, so 5% of fiat's actually money laundered, which is shocking amount, actually. I have no idea.
Actually, one thing that I did state it in my research, Jeremy, regarding that is, in order to launder money, you need to have an entire cycle. Then again, we're back to cycles. So the money, it has to come from an illegal source, and it has to end up in either a bank account or actually buying assets. And when I say what I mean with asset is a house, a car, like daily expenses as well. So that entire cycle from let's say black money to clean money, that entire cycle, if you put in cryptos, what's the game? It's just an extra layer. Like, you can buy cryptos using cash, which can be from illegal activities, but then you have to launder those cryptos into fiat money to put it in a bank account. So then again, what are you doing?
It's not clear what the money laundering mechanism is with crypto, is it? I guess. Yeah. Okay. Fair point.
It's not very clear, but according to Interpol, the entire process, once you include cryptos on it, it's just an extra layer. By their own words, like, this is public information, is related. It's stated in their website. There are plenty reports from the European Central Bank, from what was the other name? I think it was European.
There's probably BIS was involved with that too, I guess, right? Bank of International Settlement.
European Systemic Risk Board, exactly. That's the other one. The Interpol, they have plenty reports on how much money is used in cryptos. The thing that they were more worried about was actually the scams and the violent attacks towards crypto holders, which is actually increasing every year.
Interesting.
More than actually money laundering. Money laundering is just on the news because it sounds good. It doesn't mean that it's actually real.
Okay, good. Thank you for that. Very insightful. Okay, another question from Frank. Good, Frank. I'm glad you're joining us. What current? I think Frank, you've answered your own question. Frank's in California. What country is currently the leader in stable coins, Rebecca? What is there an obvious leader?
Frank, I probably read it at some point. I don't think I actually touched that in my research. I can tell you some information about it. I don't know which country exactly is the leader. I can tell you that Nigeria is using a lot of stable coins for daily life, like I said, in retailers. So it's a big thing over there. I can tell you that Arabic countries are coming into their sense regarding crypto, and they're mostly focused on stable coins, not that keen on crypto itself, but stable coins, yes, they like it. I can tell you that there are projects to include all the countries in Africa, because if Nigeria is using it, there are other surrounding countries. So Nigeria is the African hub. Whatever they do is actually leading the way for the rest of the African countries in terms of population, economic growth. All of that, Nigeria it's top gun in Africa. So if they're doing it, the rest of the countries are actually trying to copy. The bad thing about using cryptos in Africa is you need a cell phone at least, and you need Wi-Fi or an internet connection, which is not that easy to get by in many of the countries. So that I can tell you that, but I don't remember exactly the use of stable coins, like which country. I can also tell you that it's usually highly related to the needs of the country. So in the research, I found that countries like Latin American countries, for example, given the need for not paying big fees on anything, they do like stable coins more than Europeans. For Europeans, there's not that big of a value. So stable coins are mostly used for trading. When you're trading, you need two currencies. You need a Bitcoin, USDC, or Ethereum, whatever it is, like USDT. Okay, so you need the stable coins to trade, and that's what we use it most in Europe. But Latin American countries, they use it to receive remittances. There's also a growing interest in stablecoin trading itself, because sometimes stablecoins lose their, sometimes like several times a day, they lose their parity for a few seconds.
Oh, I didn't know that. So there's arbitrage between the different stablecoins then, because they depend sometimes. Okay.
There is arbitrage. There are even platforms who are using trading bots to make a percentage out of this. Which is, I mean, if you're trading millions, it might be of interest. They can get I think it was around 17% or 15% a year. But it's very stable. Yeah, it's very good actually. And it's very stable, and you can get it out of everywhere. Every stable coin is using a parity all the time. You just need a very well-trained algorithm to recognize it immediately, because it actually changes very quickly.
It's probably a high-frequency problem, isn't it? I can imagine.
Exactly. It's a high-frequency algorithm. So there is even interest on that. But mostly Nigeria and I would say
Nigeria is definitely big, actually. I mean, I guess it's the questionable central bank, basically. I think it's entire necessity, right? It's not a luxury there, so good for that, actually. Good. More questions. Good from G10. So how about Estonia? Am I okay? More of a legal question, so I don't know if you want to take that or not. Advise me not. So, G10's he's got his e-residency in Estonia. Congratulations, good done. Is he able to open a crypto firm there or not, Rebecca? Do you want to try it out, or how sort of confident are you asking that question about having e-residency and opening a crypto firm?
Yes. I'm not a lawyer. And I'm not a lawyer. I can tell you, yes, the reason behind Estonia leading the European platforms is actually legal benefits that they have. So it's easier to do it in Estonia than anywhere else. I encourage you to read more about this. But yes, one of the steps that you need to complete is actually getting your residency. You don't have to go into the country ever. That's why they have most of the European platforms linked to Estonia, because you don't have to go. You can open up your crypto firm online. You can get the license easier than anywhere else in Europe. But then again, I'm not a lawyer. I just encountered the data regarding Estonia.
Yeah, I think even the Swiss one, actually, I forgot what they're called. They're actually sort of Estonia sort of based, actually, whichever they're Swiss.
Yeah, Switzerland. Actually, my upcoming hedge fund is going to be in Switzerland. They have the crypto valley over there, which is highly focused on crypto. However, it's far more expensive to have it in Switzerland and to have it in Estonia. So the difference for us, for example, when deciding the place to settle, was that Switzerland is the financial hub of Europe. So there is a lot of potential investors. We were more focused on institutionals, and every bank is in Switzerland. It made more sense than Estonia. But it's a similar process. It's just that Estonia's regulator is not as strict as the Switzerland one. So the FINMA in Switzerland is actually far more, they request more information from you when it comes to open up, for example, a hedge fund, which is a highly regulated industry anywhere in the world. So Switzerland is harder in that way, but you don't have to go. Either way, it's the same. You don't have to visit the country. You don't have to do anything. you can open it up from the outside.
Okay, well, I guess there's an EU, non-EU argument too there, right? With Estonia versus Switzerland.
As well, yeah.
Okay, good.
And also, if you do it in Estonia, it will give you access to the European countries.
Because that will put you under the MICA thing immediately, right? Presumably, so that's a different proposition there, isn't it? Really. So good. Okay, right. Learning about regulations too. Good. Okay. Well, once again, it's probably time for a disclaimer that we are. Well, especially you, Rebecca, you're a very good practitioner, but you have a good team of legal advisors and everything else and infrastructure, so that's the way you operate, and as opposed to sort of answering questions out of.
Well, if you have a crypto firm, you always need a good legal team.
Yeah.
It's very, very hard to convince regulators that you're doing the good work, so you need a good legal team.
There we go. Okay, I've had a thank you from Gigi and Frank here. Okay, right. Last 5 minutes. I don't see any more immediate questions other than Stuart wanted a bit more information. Maybe it's worth you having a chat separately, actually, Rebecca, with Stuart. I think he's still got some questions about stable infrastructure, so maybe that's a separate follow up. So there we go. I think we have our sort of weekly online weekly crypto chats on there with Gary, actually. So good. I think we've covered a lot here today. So in terms of your research, where you see things going, regulatory aspects too. I think we've got your book. Any plans for a future book? I always ask this every time there's a podcast. There's maybe a book on the back of your research. I don't want to give you more work here, but maybe some ideas of what could be next on your roadmap, if that makes sense.
So I actually plan keep doing research next year.
Right.
So I will be probably going into using crypto for reducing poverty in Africa. That will be the next subject.
Nice.
Yeah, it's already being used, but my idea is how can we do that better? How can the government encourage and help users to understand crypto, to avoid scamming, to encourage them to reduce poverty through the use of crypto. So that's the next subject, and let's see if anything good can come out of that. Yeah.
Good. Okay, changing the world. Because I guess I mean I wouldn't call it a competition, but they've got the M-Pesa already. So I guess is it going to be cheaper, faster, and better than what they already have across various countries? Right. So
they're very keen, actually. They're very keen on crypto. They're very surprisingly enough, I've been looking into Nigeria's regulation lately, and they're very strong on approving projects. It's not simple, it's not easy, and they require like a 12-month test. So they limit you, they start watching you, and if after a year you're still in the market, you're still existing and you're not scamming people, then that's when you actually go public. They allow you to. It's a very good system.
Interesting. If you last a year, that means you're probably legit. Okay, that's an interesting one.
Exactly. Okay. That's the idea. And it's when you look at it, when you think about it, it's actually quite practical.
It's true.
It is, but our intention, I mean, it's as a team in Corvus Albus Capital is to actually make an impact in the world. So cryptos were created to make an impact. It wasn't created to speculate. And although we are traders and we love to speculate, we also opened up a software company dedicated to programming in the blockchain. So our idea.
Yeah, you're partner in the software. Okay, you've got the software business too.
Yeah.
Right? Okay.
I am called Smartware Innovations. So our idea is to just make an impact in the blockchain and help the population worldwide to have a bigger opportunity of creating wealth throughout crypto, or at least reducing poverty, which is very hard to do, actually, but we are working towards that. Yeah.
Lovely. Great. Thank you, Ashley. And then just final words. Actually, there was a poll, so you've been voting on the poll. Are you currently invested in the crypto markets? Obviously, a very biased poll, because if you're listening in, it's very likely you'll be. So 71%, Rebecca. So 71% of our live audience are currently invested in the crypto market. So 28%.
That's amazing.
I know. Good, actually. On that note, Rebecca, thank you very much. Tarun, as always, thank you for the commercial update. We'd love to have you back, Rebecca. Keep us updated. I think you're doing some fascinating work across different areas, so you know where to find us. And on that note, please do connect to everybody on LinkedIn, and we shall see you. I think our next podcast is on June 24th with R42, so that will be our next podcast. So, all, thank you very much. Take care. Over from this end. Bye. Thank you, Rebecca. Thank you, Tarun. Bye.